Success is nothing more than a few simple disciplines practiced every day. Jim Rohn. Jim is absolutely correct, and that's what we do every day here at chartingwealth.com. A few simple disciplines, 10 to 15 minutes a day following these stock charts, looking for weekly vertical crossovers, finding trends, following them, obeying the rules, learning what the rules are. Now let's jump into these charts. Great training for you in the show notes. If you're not a subscriber, go ahead to chartingwealth.com, sign up. Everything there is for free. If you would like to purchase something, we do have a book available. See the link in the show notes. Attention, Patreon supporters. There is a live monthly call-in question and answer training tomorrow just for you. 12:30 Eastern Standard Time. Look in your email. You will see that we have the call-in code, numbers, all that stuff for you to participate. If you have any last-minute questions, go ahead and fire those off to us if you'd like me to be prepared to answer them. Always happy also to answer questions off the cuff. Hope you can join us tomorrow, Wednesday, the 12th of February, 12:30. If you happen to be a Patreon supporter at any of our three levels. Let's jump into these charts. Not a whole lot rocking in the markets today. We see the S&P up 0.18%. NASDAQ 100 flat. Bonds down a little bit. Gold down a little bit. Let's jump into Let's jump into the S&P 500 first. Look at what we see there. Still 2 days into the week. We still have the derivative oscillator is negative. We do have a green up candle forming, price percent oscillator heading up, but interesting that the derivative oscillator has gone negative. That is in part to the down week ending the 31st of January, and then the big wick on top of the week on the 7th, wick on the bottom, and a green spinning top. So again, that devolved the derivative oscillator. And in fact, that's going to be the training today, is on the derivative oscillator. That's going to be the special link in your show notes so you can understand why we use it along with the price percent oscillator. I want you to take that training, see the link in your show notes, spend 5-10 minutes studying that. I think you'll get a lot from it. What's happening will mean more to you. So we see on the weekly chart up movement. We go to the 2-day, hasn't yet crossed over, going up, sure is trying. And of course, this 2-day candle represents both Monday and Tuesday, and not enough energy to cross over. But let's see what happens on Thursday. If things continue to move up, we can see there's a big wick on that green candle, no wick on the bottom. And again, is closed higher candle-wise and did hit a higher high. So that's good to see. We'll see if we do have a crossover. We go to the 4-hour chart, and of course, up in the morning, bit of a pullback in the afternoon as things slowed down. Derivative oscillator losing momentum. Price percent oscillator also not heading up at the same strong angle it had been. Now, the Qs had been stronger than the S&P were not today. The Qs was not stronger today. However, that price percent oscillator is heading up. Derivative oscillator still positive. Big green up candle hitting a higher high, 230.44 last week. So far this week, 234.30. So is hitting a higher high for the week, just 2 days in. Go to the 2-day chart. What do we see there? Again, the prior high, 230.44. This high, 234.02. We see that we did have, of course, we talked about that crossover. We did have nice moves on Monday, sort of petered off to zero. On Tuesday, price percent oscillator putting away from the red signal line. Derivative oscillator is confirmed green, going up. So we'll see what things do over the next couple of days. Those of you who jumped in on Friday using the weekend effect for a quick trade, practice trade, did well, I know. Now let's look at what's happening on the 4-hour chart. We saw that up movement in the afternoon, stronger movement up in the afternoon on Monday, some in the morning on Tuesday, pairing off in the afternoon to make it flat for the day. Price percent oscillator is about flat right now on that 4-hour chart. Derivative oscillator continuing to lose upward momentum. Still positive, but losing momentum. Let's go to bonds now. Get away from stocks. What do we see going on with bonds? Well, we see a green candle after a red. And again, red open box means a slowdown of the up movement, not down movement like we see with solid red candles. But we do see a slowdown that prior week, that is the week ending the 7th of February. This week so far, not reaching a higher high yet. Price is right there just below the weekly trend line, right there on the 2-day on this weekly chart. Price percent oscillator flattening, derivative oscillator still heading up. We go to the 2-day chart. What do we see there? Of course, the 2-day chart is derivative oscillator losing momentum, price percent oscillator slowing a little bit. We do have a green up candle, but again, reaching nowhere near the high back on the 3rd of February. Still a sideways slide, maybe moving up a little bit, sitting right there on just above the weekly trend line below the 2-day on this latest 2-day chart. So we'll continue to keep an eye on that. What about the 4-hour chart? Won't cross over going up to give us a trade, will it? Rolling over, pulling away, the price percent oscillator pulling away from the red signal line. Derivative oscillator gained a little bit of momentum at the end of the day, but 2 down candles for the day on the 4-hour charts for Tuesday, down 0.50%. So until we have a crossover on that 4-hour chart, keeping the powder dry. So keep watching, waiting, seeing if bonds are going to recover and follow suit of that weekly vertical crossover, which is just not added up to much of anything so far. So keep an eye on things. What about gold? Gold, of course, crossed over, had a nice gainer after a week of slowdown on the 17th of January, up the week of the 24th, really bounded up, ending the week of the 31st or up through the 31st that week. And then, of course, what we saw over the prior week of February the 7th, we saw a red spinning top, things slowing down. 2-day chart crossing over, going down. And so far this week, a green spinning top means indecision, tending up. The price percent oscillator heading down, derivative oscillator losing momentum. That's on the weekly. We go to the 2-day, and of course, it crossed over, going down back on the 7th. That was Friday the 7th. Monday and Tuesday, we got a green spinning top right there on the weekly trend line. That's where we are as we close the day on Tuesday with the first 2-day candle this week. Go to the 4-hour chart, trying to push through back in the afternoon on Monday, but then Tuesday down in the morning, down in the afternoon, down 0.34%. So gold is just not catching fire at this point. Still above the weekly on that 4-hour chart. So we'll watch and see what's going on, but gold is showing some weakness. And of course, don't forget, crossed over, going down on that 2-day chart, which of course takes us out of the play. That's where we are, folks, as we end the day on Tuesday, go into Wednesday, hump day. And again, reminder, Patreon members, you have the ability to join us for a live call-in Q&A training tomorrow, Wednesday at 12:30. If you have been putting off becoming a Patreon supporter, join all those that recently signed up. We'd love to have you. Any 3 of our levels give you access to that. And of course, all sorts of special training. God bless, my friends. All the best from the whole team at Charting Wealth World headquarters. Order the book, Charting Your Way to Wealth. See the show notes.